Good morning, friends. Welcome to Adda 24/7. We are in Achievers MCQ series for BFM, and today's topic is credit policy. Now, remember, credit policy doesn't mean only credit policy, it involves credit and monetary policy because RBI always introduces credit and monetary policy every bi monthly. Okay, so watch this video till the end because it's an important topic for BFM. Okay. Firstly, download Adda 24/7 app on your mobile. In this app, you will be getting all the premium study materials plus current affairs, job alerts, live classes. Then you will be getting ebooks, tests. What all do you require more for clearing CAIIB? That much is enough. Okay. So download it fast. Also, subscribe to Officers Adda 24/7 YouTube channel. In this channel, you will be getting two things. Number one, free YouTube series on all the subjects of JIB and CIB. Number one. Number two, you will be getting latest updates on JIB and CIB. Okay, all the latest updates. So download it now. Subscribe to this. Click on the bell icon. Okay, these are the two new batches. Okay, just now started. Join them ASAP. Okay, because BFM has yet not started. Okay. So join them ASAP. 80% discount, double validity on Mahapack. This offer won't last long. Use the code Y432. More on this later. Okay. So there was yesterday's homework. What was the yesterday's homework? Yesterday was very important topic on tier 1 and tier 2 capital. We had solved one numerical on this. Okay. So everyone should watch that topic again. If you have not watched it, again watch it again. Okay. Okay, so the homework over there was, in the bank, tier 1 capital is given as 10,000 crore, tier 2 is given as 8,000 crore. So what is the total capital for Basel calculations? Okay, how many of you know this? Type yes in the comment section or type the answer only. What is the basic rule? The basic rule is tier 2 capital cannot be greater than tier 1. Okay, what is tier 1? What is tier 2? Kindly watch yesterday's video, okay, because it will take a huge time if I go on explaining it now. Tier 2 can't be greater than tier 1, but here is tier 2 greater than tier 1? No. So this condition is already applied over here. So my total capital will be T1 plus T2. Always remember, total capital for Basel calculations is T1 plus T2. So what it is? It is 18,000. Simple, isn't it? It is 18,123. Okay. 18,000, that is the answer. 18,000 crore, of course. Okay. Now let's study what is today's topic. What is the today's topic? Credit policy. What is the credit policy? As I told you, it's credit and monetary policy. Okay. Credit policy is a set of terms that lays out how RBI will issue credits to its banks and collect unpaid debts. Credits to its banks and collect unpaid debts means what? What does it mean? Credit to its banks. Here, logic is very simple. Who gives, okay, let me ask you one thing. Bank, who gives loan to the customer? Bank gives loan to the customer, right? Customer. Okay, customer. And this is a loan given by the bank. And then what does the bank do? Bank collects the interest as well as the loan amount. Okay. So interest plus principal, both of them are collected by the bank, right? Because that is the basic job of any bank, isn't it? So bank gives loan to the customer and collects principal and interest from the customer. Okay. Now who gives loan to the banks? Loan to the banks are given by number one, depositors. Okay, I'll not touch that topic now because that's a simple topic. Depositors give money to the bank, right? This is one way. Depositor. Okay, depositor deposits money with the bank and bank gives loan to this loan customer. I'll call this loan customer. Okay, customer of loan. Okay, so this is one way of getting the money from the depositor. There is another way. What is the other way? See here, as bank gives loan to the customer, similarly bank also gets loans from RBI. Okay, RBI lends to the banks at what rate? RBI lends to the banks at repo. Okay, repo rate, and then it collects money from the banks. Here, once it is lending, it will have to collect the money also. Simple, interest and principal both, isn't it? So again it collects interest and principal both. Okay, so that is the way it functions. So bank gets loan from two parties mainly. One is depositors and second is RBI. So that is basically the credit policy. Credit policy means how should the RBI lend to the banks, and how should it collect the interest and principal, unpaid debts. Okay, that's the meaning. Anytime you invoice a client, means here this is for normal business. Okay, for services and begin working before the client pays you, you are technically working on credit, right? Mean this is a simple day-to-day activity. Similarly, RBI also functions on the same way. When you invoice a client means what? When some client gives the invoice to somebody, means what? He is a seller. Okay, this is a normal day-to-day transaction. The same can be applied to RBI also. So if the customer gives the invoice to to somebody who's buying it, so that the other person, buyer, will have to pay. Okay, so before paying that, the duration in which this seller gives the goods, but those are not paid up to, by the buyer up to that time, that part is called as credit period. Okay, credit period. So similarly over here also, in same logic, bank also. Okay, RBI gives loan to the banks. Okay, and banks repays it later. So before repaying, this duration is known as a credit period for RBI. Okay, got it everyone? Same logic is used by RBI also. See here, let it be RBI, let it be a normal house, let it be a normal business. Everyone will function on the same logic. Give the loan and collect interest and principal. That's the basic logic, right? Only the point over here is, in credit policy, which we have to remember, is it's always related to short-term credit. Short-term, okay? Means RBI's credit policy is never for long-term. It's always for short-term, okay? Got it? Credit policy is given bi-monthly. Every 2 months, RBI declares a credit policy in which it changes all that. CRR, repo, both the things can be changed. Even any factor they can change it. Okay? Is monetary policy and credit policy same? Yes. Okay? Remember this basic fact. Monetary policy and credit policy are same. Credit and monetary policy is the macroeconomic policy laid down by the central bank. It involves management of money supply and interest rate, and is the demand side economic policy used by the government of a country to achieve macroeconomic objectives like inflation, consumption, growth, liquidity. Okay, so the important part over here is, remember, both are same. And why are they given? For short term influences. Short term influences means, see this, inflation is always short term. Consumption, right, growth and liquidity, these are all short term measures which are to be followed by RBI using their monetary policy, so that there is no liquidity crunch in the system. This is very important part. If the banks have a liquidity crunch, RBI will have to go for the expansionary policy. Okay, it will have to reduce the rates. I'll come to this later. Okay, expansionary, contractionary, I'll come to it. See here, credit control means what do you mean by this credit policy? Credit control will have, or credit policy will have, two measures. One is quantitative. Quantitative means what? Which can be measured in numbers. These are all measured in numbers. And second is qualitative. This can't be measured in numbers. Quality, can you measure quality in numbers? Just type yes. Can you measure quality in numbers? No, right? If you have to measure quality in numbers, you have to quantify it. Okay. So what are the measures of quantitative measures? See here, reserve ratios, CRR, SLR. So this is the main tool of RBI. And second, next is OMO, open market operations, means buying and selling of bonds. What is OMO? OMO is buying and selling of bonds. Third one, policy rates, bank rate, repo rate, reverse repo rate, and MSF, marginal standing facility. Okay, what is bank rate? See here, I'll just give you short definitions about this now, because this I've covered it in separate video. Bank rate means the rate at which RBI discounts the bill of exchanges. Discounts, okay? Discounts the bill of exchanges and promissory notes of the banks. Okay, definition number one. Repo rate, the rate at which RBI lends to the banks for overnight as well as long term basis now. Repos are not limited to overnight now. Repos can be for long term, for 3 month repos can also be there. Okay, reverse repo, reverse thing. The rate at which RBI borrows from the bank. Okay, borrows money. MSF is a emergency situation. Emergency means what? Marginal standing facility. Okay, I'll explain you later. I have a separate slide on this. Okay, MSF I'll explain you because this is very important part over here. Okay, what about the qualitative measures? Credit rationing, consumer credit control, margin requirements, moral suasion, and direct action. Okay, these are all qualitative. These can't be measured in numbers. Okay, what is moral suasion? Moral suasion means not giving loan to certain sector. That is called as moral suasion. Credit rationing, giving limited funds to the banks. Okay, that is rationing. Okay, move on. Say this. Slower inflation. Say this. Now I'll come to this expansionary and contractionary policy. If the RBI hikes the interest rates, what is it doing actually? Hikes the interest rates means repo up, CRR up. If RBI hikes the rate, what is it doing actually? It is slowing the economic growth. Also it is slowing the inflation. Remember this. See here, inflation and growth. Okay, growth. They go hand in hand. Always. Okay. Inflation and growth go hand in hand. Means if growth increases, inflation will also increase. Mainly 99% the same thing happens. So if something increases like this, RBI has to control it. RBI has to control the inflation. So what will it do? It will increase the rate of interest, means repo and CRR. Because of that, what happens? Lesser money goes on in the system. See here, it's like this. RBI hikes rate. Okay, so once RBI hikes rate, banks will take lesser money from RBI because the rate of interest is more. So if they get lesser money, they will give further lesser money to the customers. So that will reduce the inflation. And reverse thing is over here. If RBI cuts the interest rate, then what will happen? Interest rate, inflation and growth, they will grow a lot. Growth will happen, that is a good sign, but inflation, that will always be a dangerous situation. Okay, so cutting the interest rates is done by RBI. This policy is known as what? Expansionary. This is always remember. This is known as expansionary policy. And what is this policy known as? Contractionary policy. Contraction. Okay, contractionary policy. Got it? Okay, before going ahead, see this. The class is starting on February 28th. Just started, okay? It's already started. All the 4 subjects are covered. Only few days have passed. Many holidays were there, so you haven't missed much. Also, you'll get the recorded videos. Not to worry about that. Also, importantly, see this. All the 4 subjects are covered. Numericals, objective questions, case studies, everything you'll get it over here. 80% discount is going on, double validity on Mahapacks. How to get the 80% discount? I'll show you at the end. Okay. Now let's come to the question time. Bank rate is same as what? MSF, repo, reverse repo, none of the above. So bank rate is same as what? Generally. Yeah. Bank rate. Anyone knows? Bank rate is same as MSF. Okay, this is bank rate here. This is bank rate and this is this is MSF. Okay, MSF. And below it is always reverse repo. Now they call CDF rate. Okay, and in between there is somewhere repo. Always remember, repo is always between MSF, sorry, not MSP. MSF and reverse repo. Okay, so bank rate is now combined with MSF. Okay, bank rate is now same as MSF. Okay, got it? Expand MSF, marginal standing facility, minimum standing facility, then marginal sitting facility, and none of the above. So what is the option? Obviously 3 is out. Who can give me the correct answer? Marginal or minimum? Everyone. Marginal or minimum? Who can give me the correct answer? It is marginal standing facility. Okay, marginal. What is this MSF? Let me see if I'm having this method MSF over here. No, I'll just explain this MSF. MSF is what? It's an emergency situation. Emergency. What do you mean by emergency? When the bank has exhausted all the means here, exhausted exhausted all means, okay, of getting money, okay. Then RBI has given a special privilege to the banks under MSF. What does bank do in MSF? It keeps the SLR, extra SLR securities. Extra SLR securities are kept by bank with RBI. Okay, and how many are possible? Maximum 3% of the securities can be kept. And then it's a loan, collateral loan. It keeps the extra SLR securities with RBI, and RBI gives money to this bank. It's a overnight facility. Again, it's a just marginal standing just for a short term. Okay. What is meant by credit and monetary policy? So this is a basic topic. What is credit and monetary? The process by which Parliament controls the money supply. The process by which central bank or monetary authority of a country controls the money supply. The process by which international market controls the money supply. So what is the correct answer? Is it controlled by Parliament or central bank or international market? What do you say? A, B or C? Everyone? Is it A, B or C? Does Parliament have any role? Indirect role it has. Indirect role I can definitely say, but direct role not possible. Direct role is only by B, central bank or monetary policy. Central bank or the monetary authority decides this credit and monetary policy. What is the difference between the real interest rate and nominal interest rate? See this. Real interest rate means, remember, real means what? It is based on, always remember, two things you always remember. Real means always related to base year. Base year is always attached to the real interest rate. It can be interest rate or anything, inflation also. Real inflation, nominal inflation, it can be anything. And here no base year. No base year. So that's why remember the difference. Real will always be attached to the base year. So once I say it is attached to the base year, it means what? When I say base year, I can definitely compare the things with the base year. It means I am comparing actually inflation. So real interest rate will always take into account inflation. So is one true? It's up to your guess. Nominal rates are those which apply only to borrowers and not lenders. Our nominal rates means no base year, direct whatever are the rates presently are used. So are these rates applicable only to these borrowers and not to lenders? No. Okay. So the answer is 1, but so the option over here will be only 1. Got it? Okay. What is an OMO, open market operations? This is for your homework. Okay. Outright purchase and sale of government securities by Reserve Bank. Outright sale of government securities by Reserve Bank. Outright purchase of government securities by Reserve Bank, and none of the above. So is it both purchase and sale, or is it only sale, or is it only purchase? What is the correct answer over here? Now that's what you have to answer. Okay, I'll answer this tomorrow. Okay, everyone clear? Okay, now let me discuss these batches. Okay, this Y432 code will be used by you and it will give you huge discounts. Remember, all the 4 subjects are covered. Number 1. Number 2, you will be getting major discounts using this code. Okay. Number 3, all the numericals, objective questions, case studies, everything is covered over here. Now I'll tell you, show you how to get the discounts. Okay. Go to Adda 24/7. If you are having the app, I would suggest go on the app. Okay. Click on JIB and CIB. Now you'll see this. See this. Click on CIB 23. Now CIB 23, you'll see the batches. Click on this English batch. Okay. Got it? Now you'll see the description, all the details like when the batch is started, what are the days, then what are the timings, then what are the fees and everything. Here, importantly, recorded videos are available 24/7. So if you miss out on any class, you can definitely get back to those classes later, right? 2-way interactive classes are available, ebooks are available. Okay. So let's look at the fees. Okay, how to get the discounts? 23,999. Click on view offers. Put the code Y432. Click on apply. Now look at this. 23,999 reduces to 4,799. Such a huge discount you are getting. Okay. 4,799 means what? It's a means full batch fees. All the 4 subjects at just 4,799. Such offers you won't get for long. Okay. 80% off is there. Also, importantly, I would suggest go for the Maha pack. In Mahapack, what happens? Once you join the Mahapack, you'll get 15 plus batches for JIB and 15 plus for CIB, means whichever Mahapack you take, depending on that. So if you click on JIB, CIB, Mahapack, look at this. Now click on, again go to the front page, click on JIB, CIB, Mahapack. Then click on CIB ka Mahapack. Now you'll see the details. Look at the details. This 15 plus batches for ABM, BFM, ABFM and BRBL. Live classes with more than 500 plus hours. Okay. Then detailed case study batches are there. 15 plus full length mock tests are available. 50 plus topic wise question banks are available. So what do you need? Okay. Also, of course, recorded videos are available for all the batches. Okay. So live classes for more than 500 plus hours. Now look at this. Look at the fees. 35,996. Click on view offers. Put the code Y432. Click on apply. Now look at this. 35,996 reduces to 7,199. 80% off. And look at the validity. Validity is 6 plus 6, 12 months. I'll give you simple mathematics. Divide this 7,199 by 12 months. Per month it comes to what? Around 600 rupees. Okay, less than that, but around 600. Divide this per month 600 by 30 days. Okay, so you'll get around 20 rupees per day. Now if you are getting 20 rupees per day, how much do we spend on our tea breaks in the bank? Tea breaks, this break, that break. We generally spend 50 to 100 rupees per day. So now in 20 rupees you are getting some investment for the lifetime. Once you clear CAIB, in how many months will you recover all these funds? Hardly 6-7 months. Okay, so go for it immediately. Okay, why am I stretching on the batches? Because the portion for CAIB has changed. What is the new portion? Okay, let me show you that also. Okay, one sec. See this. ABM, BFM, ABFM and BRBL. All the 4 subjects. Okay, these 2 subjects are new, ABFM and BRBL. Also electives. Look at this. Rural, HR, IT, Central Banking and Trade. There is no retail elective. Okay. Negative marking has been removed. So that's a good sign for you. But there are subjective questions. As per the schedule given by IIBF, you have subjective questions. So that's a difficult part. So that's why join the batches SF. Why? Because you will be needing a mentor or a guide because subjects are new. Okay, portion has changed. Okay, I'll be back tomorrow with another series. Till then, bye.